SoFi stock is down nearly 40% in just the past 1 month. In this video, I want to take you all through what's been going on with SoFi to cause such a massive move to the downside, and whether or not this presents a long-term opportunity to shareholders by taking you through my long-term projections for revenues and profits and valuation to come up with some price targets and exactly what I'm doing with SoFi moving forward. So if you end up enjoying this video, please consider hitting that subscribe button, folks, and with that all out of the way, let's get into it. So first and foremost, what the heck's been going on with SoFi? It's down 40% since November 11th. That is less than 1 month ago. Well, it's important to understand that this massive move to the downside in SoFi stock is a part of the larger move downward we've been seeing in a lot of these mid-cap, unprofitable, high-growth tech companies, which SoFi, with no doubt in my mind, is a part of. They grew their revenue over 80% throughout 2021 with a pretty big loss on the bottom line, ranging from around 30 to 40% in the red. Now, over time, SoFi will become profitable as they continue to scale their business, but currently they fall under that category, and that's why the stock has fallen so significantly. It's getting bundled up with the Palantirs and the Affirms of the world, which fall under the same category of high growth and potentially low to no profitability. Now, looking at SoFi, this may potentially present a massive opportunity if the valuation and the numbers make sense, which I highly do recommend you stick around till the second half of this video, where we actually go through the numbers and determine where SoFi could reasonably trade at 5 years down the road. Now, what is SoFi's business model? What's been going on? And does it have potential moving forward? Well, first and foremost, they're pretty much an all-in-one finance app that's, as the simplest way to describe them, taking care of all aspects of finance within your life, whether it be investing in stocks and cryptocurrencies and retirement accounts, or taking care of your student loans, maybe even your mortgages, your credit cards. Pretty much everything that has to do with money. Now, over time, they're going to continue expanding their product offering and potentially increasing their potential from the perspective of average revenue per user, which is one of the key drivers of revenue growth at this company, alongside growth in what they call members. So you look at their actual business model, I love it. And if you do live within a certain country that they operate within, feel free to check out SoFi, download the app, check out what they got. Now, looking at their actual business, you can see SoFi from an app perspective. They do have a couple subsidiaries, but from SoFi, their core business, we've actually seen some pretty strong growth in App Store rankings at SoFi. This is, again, the top charts of the finance section of the App Store. There has been a bit of a drop here over the past few weeks, but generally speaking, at around 40th currently, they're still in a very good spot, experiencing a pretty significant amount of growth. And this is pretty much mirrored in the Android store. But either way, good growth at the company, which dictates to me that furthermore, this drop has nothing to do with SoFi's business, but rather what we're seeing in the overall market. So let's take a look at their business model, their financials, and see whether or not this is worth it moving forward. The first thing we got to take a look at is their balance sheet. Obviously, as a company worth over $10 billion and a company that is unprofitable, an important thing to look at for unprofitable companies is, do they have money to operate moving forward, or are you at risk of dilution? In the case of SoFi, they have in and around $1 billion in cash sitting in the bank, just around $533 million in cash and cash equivalents. You do have some restricted cash here, which may take them a little bit longer to get a hold of. Then you have $200 million in investments. So generally speaking, just over $1 billion in cash sitting in the bank. They do have a few $billion in debt. Keep that in mind, although it is long-term debt from my understanding, that is a risk at SoFi, the fact that they do have a pretty elevated level of debt that they will have to pay off at some point in the future. Now, in my opinion, given the strength of the SoFi brand, they will be able to extend this debt, pretty significantly. And as you can see, they have actually started paying this off in a pretty major way here over the past year. And again, as they start spitting out profit throughout the next few years, this risk will decline pretty significantly, in my opinion. So nothing too big, but keep in mind, there is some form of potential dilution that could happen if this debt does potentially end up needing to get paid back. That's what we got there with the balance sheet. Again, the path to profitability for this company is there. As you know, looking at their actual estimates here, they're only expected to lose around $200 million in 2022, and that's down significantly from this year. Again, a net income margin going from 40% in the red to 13.2% in the red, sending them up nicely, in my opinion, for a break-even year in 2023, and then a slow rotation into profit in the back half of the next 5 years. That's what we got when it comes to SoFi projections. Let's go through the actual numbers. What I think is, you look at a lot of YouTubers out there, they talk about the business model of the company, the future of the business model. And a lot of the time, they actually leave out the numbers, which I think may be one of the most important things. So let's go through it right now. I'm going to use this spreadsheet right here from Chamath Palihapitiya. He is one of the individuals, or the main individual, that took care of SoFi's transitioning to becoming a public company, again, going through his SPAC IPOE. So his estimates right here in this, again, it's not his estimates, it's kind of his paired with SoFi, is that they're expecting to hit right around $3.67 billion in revenue by year 2025. That is their expectation. And you do have a pretty large variable here with this bank charter, which we're going to go through separately in a moment. First and foremost, let's go through the actual business minus this bank charter, which we will go through. Either way, expectation of around $3.6 billion in revenue with an adjusted EBITDA margin right here of around 32% by year 2025. Now, I don't really like to use adjusted EBITDA all that much because it is earnings before interest, taxes, depreciations, amortizations. So given potential expenses and taxes and interest rates, which this company is pretty involved in the actual lending space, I do think it's important to keep an eye on the PE ratio, the actual earnings that this company is spitting out, which we have right here. Chamath is saying that given a $8.65 billion equity valuation and given this $3.6 billion in revenue, this company may be trading at a 13.6x 2025 price to earnings ratio. Now, I did the math, and this kind of turns out to be right around a 17.3% net income margins in his expectations by year 2025, given this $3.67 billion in revenue and given no bank charter. So I'm going to take you guys over right here. And again, assuming we get to roughly $3.7 billion in revenue by 2025, and assuming that kind of continues into 2026, which I do like to use a 5-year analysis when looking at my companies, as generally speaking, that's what you want to look at as a long-term investor. You get to roughly $800 million in potential net income here by 2026. And again, this is somewhat optimized given that it doesn't really make much sense for this company to get to full-fledged profitability within the next 5 years, given the potential for continued growth in members and products and innovation. But again, given these numbers, which could be considered quite conservative, given that they're not factoring in a bank charter, gives an expected return using a PE ratio of anywhere from 20 to 40 of right around 5 to 20% over the next 5 years. Now, I do want to add, when it comes to the PE ratios right here of 20 to 40, I do think 20 is a pretty unrealistic scenario for SoFi. Given the growth that they have, I do think 30 to 40 is much more reasonable, given that this is a growth company, but on top of that, their revenues are pretty dang stable, if we're going to be completely honest here with you guys. They're not too exposed to the crypto industry or the stock industry, so if we go into a bear market, there won't be a huge impact on their business. And obviously, as an all-in-one finance platform, they have much more potential to expand into many more business verticals, potentially giving some more investor confidence in the longevity and sustainability of their platform throughout many different economic environments. Now, I know some people may be like, hey, Daniel, that does seem a little bit low, which In all honesty, it does, but you gotta consider that this is not factoring in a bank charter, which when I did my analysis of SoFi a few months ago back when it was trading right around this level, I did two things that might have been considered wrong. First and foremost, I only looked out to 2025, which at the time did kind of make sense because, again, I like to do 5 years. At this point, we're pretty much done 2021, so it makes sense to look to 2026. And I also didn't really factor in a bank charter, which, given what we've kind of found out here over the past few months, is seeming more and more likely. And over the next 5 years, I feel like we will end up getting it. And what a bank charter essentially allows them to do is to do a lot of things internally when it comes to their loans and actually using savings accounts as a potential opportunity for loans. So again, just really internalizing the business, making it much more vertically integrated, which should not just help revenue, but also margins, which this is where things get exciting. Using this spreadsheet right here, and again, I did all of this math. I have it written down on a little note here. He's assuming with a bank charter in and around $4.1 billion in revenue at the company by 2025. Roughly I want to say roughly 15% more than what he was expecting without the bank charter. Now, in addition to this, Chamath expects the net income margin to go from 17.3% to 23.4%, assuming this bank charter. So not only do you have more revenue, but you also can expect more profitability. This is where things get exciting. If SoFi ends up getting this bank charter taken care of, you can expect significantly higher returns because all of a sudden revenue growth gets bumped up. Again, his expectations, right around $4.1 billion in revenue by 2025. And I'm going to keep this stagnant here in 2026, leading us to potentially get to just around $5 billion in revenue by 2026. And in addition to that, given this higher potential margin of 23.4%, the returns increase substantially. So when I look at SoFi as a business, and if any investors in SoFi are watching this, or any potential investors in SoFi are watching this, it all comes down to whether or not you believe in them getting a bank charter or not getting a bank charter. If they get the bank charter, which I think is very likely, the returns at this company get increased significantly, and the opportunity for them to grow in terms of revenue and profits over the long run increase substantially alongside that. So given what I'm seeing with SoFi, I like to take a bit of a middle of the road approach, which is why I like to assume maybe like a 20% net income margin and maybe not as significant of a growth rate moving into 2026. Kind of a bit of both, kind of right in the middle. And assuming those multiples, you get a pretty decent return. Now, personally, I'm already invested in a fintech company by the name of Voyager Digital. So to invest in SoFi, I'm going to probably have to see some pretty significant opportunity. If you believe in the business, there is no reason for you not to invest in SoFi. I'm not a financial advisor, but if you believe in the business model, the returns at these prices should be pretty significant. Now, does that mean SoFi stock doesn't drop further? No, it does not. If the market continues to drop, SoFi will continue to drop. And I think that's the most important thing to take away here. The business model is great. The valuation is starting to make sense given the improvement in fundamentals and the drop in share price. And I'm starting to warm up to the idea of potentially initiating a position in SoFi at some point over the next few weeks if the price does continue to drop. Now, if I end up doing that, I will 100% update you guys. But at this point, let me know in the comment section down below what your thoughts are on the price action of SoFi and the numbers that I do have here, whether 23.4% as a potential net income margin by 2025 or 2026 is possible, and more. Anyways, thank you all so much for watching. I really do appreciate it, and I will see you all in the next one. Bye-bye.